Hey, what's up, guys? Leo. So today I want to talk about my Bitcoin and Ethereum supercycle predictions and where I think the market's going. And before we get into the charts, because we're going to do a little bit of a deep dive here, I want to kind of talk about where my head is at and why I'm thinking that we're going into a supercycle. So something doesn't sit right with me with the overall market right now. It feels heavily manipulated. It feels like something is missing in the back of my mind. Have you ever gotten the feeling where you leave the house and you pause because you have this gnawing sensation in the back of your mind that you're forgetting something or you're missing something? Well, that's the exact same feeling that I'm getting right now. It's like an intuition that something is off in the crypto market. And I think I figured out what it is. I think that the elites, the wealthiest people on the planet, have figured out, oh crap, crypto's the future and retail front run to all of us. So what they're doing now, if you think about it, if you're on crypto Twitter or even on YouTube, you see people making these, what I would say, bearish predictions for Ethereum and Bitcoin. I see numbers like, oh, Ethereum's going to 10,000. What? Okay. I mean, we just saw the Secretary of the Treasury say that they're looking to build stablecoins, and stablecoins will create trillions of dollars of demand for U.S. treasuries. Okay, so why is the target for Ethereum so bearish if you're talking about trillions of dollars being tokenized onto Ethereum? And I'm saying Ethereum because Ethereum dominates the stablecoin market. So it's safe to assume that Ethereum will capture at least 60 to 70%, which is what they have right now, of the stablecoin market. The same thing is going on with Bitcoin. I see these bearish targets that analysts are putting out. Well, maybe it'll go to 120, maybe it'll go to 150. Really? I mean, the United States government just created the first Bitcoin strategic reserve for America. You see other countries around the world doing the exact same thing. You're seeing multinational companies looking to add it into their company treasury, and your target is 120, 150,000. I mean, I've seen some say 200, but even 200 seems very strange. And so it seems like there's this disconnect where you have these really low targets and you have the most bullish news you could possibly have that we've ever had in all of crypto, and yet people are like, oh, maybe it'll do kind of good. It doesn't add up. We're seeing regulations being dropped on crypto left and right, which you could think of like balls and chains, or just like a weighted vest being taken off of a marathon runner, and he can just keep going and going, and we're going to just see accelerated adoption. And I think that this entire thing is a game. I think what they're doing is they're trying to suppress the prices of crypto so they can continue to load in and buy. They're buying themselves time. And I think that the low bearish targets are so that you can be their buy-side liquidity. So let's say they set a target for Ethereum at like $10,000 and the price is getting up there. People have been expecting the price to go to $10,000, and so people begin to sell, right? So you have this sell pressure, which keeps the price from going absolutely stupid, and they're able to buy in and take your bags, essentially. Same thing goes for Bitcoin. You set these low targets for what could be, not guaranteed, but all the puzzle pieces are there for this to be the most epic bull run that has ever happened in crypto. And they're setting these really low bar targets so that people start to sell so that they can buy without the price getting too high. So just something to think about. But let's go ahead and take a look at two posts here from X, and then we're going to dive into the charts and we'll get into my Bitcoin and Ethereum predictions if this is going to be a super cycle. So coming in here, we can look at the Ethereum balances for holders. Ethereum balances between 10,000 and 100,000 are skyrocketing. This means that massive whale holders are accumulating Ethereum like never before, and I think that's because the stablecoins. Obviously, we've talked about this for months on the channel, about how I think that stablecoins are kind of the Trojan horse for adoption. The other thing here is BlackRock's Biddle Fund has now reached $1 billion in assets under management for tokenized treasuries on Ethereum. So I think this just, adds more weight to the fact that Ethereum is the institutional grade option. I mean, this is what all the big companies are building on. I think a bet against Ethereum is a mistake. I'm not saying that other coins aren't going to do well. I'm just saying don't bet against Ethereum. And if you're seeing people try to make you bet against Ethereum, it's just FUD. I would just ignore it. So let's go and dive into the charts here. So this is where it gets really, really interesting. So we're looking at the weekly time frame here for Bitcoin. Now, we have a long-term trend channel going all the way back to 2013, July, and it has pretty much maintained this long-term trend channel. And what you'll notice is that this cycle looks much, much more like the 2016-2017 cycle. So you can see here on the lower bound of the channel where it's just slowly kind of grinding higher, and then it just goes parabolic. And then we're seeing that exact same thing happening here where it's just kind of grinding low on that lower boundary of the channel, and then at some point it's going to start to accelerate. Now, I want to take a look at the global M2 money supply. We talked about this yesterday and how this is pretty much predicted every single bull run. So what you'll notice is we're on the weekly time frame here, and this is the black line is measuring global liquidity. This is essentially what happens is whenever the Federal Reserve or central banks around the world begin to cut interest rates, that makes borrowing money less expensive, and that kicks off the business cycle because businesses and people start borrowing money cheap. And whenever you borrow money, you're spending credit, right? So you can think of it like if you go out to Red Lobster or Olive Garden or some other restaurant and you take your credit card and you go out for dinner and you tip your waiter on that credit card. Let's say you tip them $20. Well, that credit, that borrowed money on your credit card now becomes that person's income, and that income flowing through the economy is what stimulates the economy, and eventually it finds its way into stocks and assets. So as borrowing money becomes cheaper and you see quantitative easing, that pumps risk assets. So you can see back in 2016, the global liquidity pumped above the 100 period DEMA, and so it stayed above there for the entire bull run. And then whenever we got into a period of tightened liquidity, meaning that, global liquidity starts going down, we enter into the bear market. And then back, here you can see it again, global liquidity spikes and we enter the bull run. And so what's interesting is that the price of Bitcoin has been going up this entire time during this period of decreased global liquidity. So what that tells me is there's a ton of demand for Bitcoin. As you can see here, there's the divergence where the price has just been slowly grinding higher as global liquidity has been going down, and we're just now getting above. Global liquidity has spiked above the 100 period DEMA. So this is the signal for the bull run, the real bull run, to just start. So now we have to ask ourselves, how long will the bull run last? Well, if we take in here, we talked about this yesterday, so just bear with me if you've already seen this. We're getting to the good stuff soon. So if we measure here all the way up to when global liquidity peaked, you got 760 days. If we go to the COVID one where we saw just massive liquidity come into the market, you 600 days. So these green lines over here are marking 600 and 800 days. So this gives us kind of a time perspective of how long global liquidity will go up for. In other words, how long will the bull market last, which means that I'm expecting the bull market to last until November 2026 to May of 2027. That's kind of the window when I think that it will peak out. So just basing on the long-term trend channel here, assuming that global liquidity will continue to go up, and this is the start, then I think that for Bitcoin, if we get up to this point in the long-term trend channel, we're looking at, and this is conservative, right? Because if you look at the past, it's gone at the peak, it's gone past this parallel every single time. You get out to the very edge of this trend channel typically. But if we just get to here, right? And this is if we have a shorter liquidity cycle of 600 days, then we're looking at basically $1 million Bitcoin. If we get to the outer bound, which it's done every single time for every bull run, we're looking at, and this is for the 600-day run, we're looking at like 1.6 million for Bitcoin. If you go longer, it gets up to 2.2 million for the upper bound, and then the lower bound here, you're looking at, this is if it goes for 800 days, you're looking at like 1.3 million. So we kind of have a window here between 2.2 to call it $1 million. Now, what we can do is we can look at the Ethereum to Bitcoin ratio, and from that, we're able to predict what the price of Ethereum will be at the end of this bull run. So I'm just going to pull up the Ethereum chart here. Now, let's take a look at global liquidity for Ethereum. So we pop this up here. You can see that the Ethereum to Bitcoin ratio typically spikes whenever global liquidity increases, as you can see back here in COVID, where global liquidity spiked up and then we started to gain against Bitcoin. So we're doing the exact same thing right now. So I expect this ratio to turn around very quickly, especially with like stablecoins and everything going to be built on top of it. So now the question is, well, how high are we going to go? So I think that we could at the very least return to the 0.08 level, which would be less than 100% move from prior bull runs. So I'm just going to remove the liquidity so I can put a Fibonacci extension on here. So I'm just going to measure the prior gain, just measure to the top, measure down to where we are now. If it moves 100%, so this would be called a measured move, where you get essentially this entire leg up from the prior bull run, would then move up again 100%, which would put it at like 0.115. For the Bitcoin to Ethereum ratio. Now we can take that and we can look at the Ethereum price and see what it's going to do. Now we put up this long-term trend channel here, and I'm not super confident on the channel just because we on the lower side we only have 2 points. I really like to see 3 points on a trend channel before it's like confirmed. Otherwise, you can just draw it any way you want. But we do see the price holding up and respecting it in the past. So, you can see how it touches here, touches here, touches here. I like to see that. So that gives me a little bit more confidence. And so that's why I'm going to work with this one. This is assuming that the bottom is in for the Ethereum price to the US dollar. Now, if we see this super cycle play out, we're going to go out to, May 2027. At the latest. And what you'll notice is if we return to the upper bounds of this long-term trend channel, that puts the price of Ethereum between 56,000, 55,000, all the way up to 120,000. Now that's interesting because if we are moving into the Bitcoin, the super cycle, if we go back to the Bitcoin or the Ethereum to Bitcoin chart, and if Bitcoin goes to $1 million, and all Ethereum would have to do to get to $55,000 per Ethereum is for it to gain on Bitcoin all the way back to the 0.05 ratio. If we get all the way up to where I think that it could go, which is the 0.08, you're looking at an $80,000 Ethereum. Now, if you get a proper measured move, then you're looking at that 0.114 ratio, which means that you're talking about a 6-figure Ethereum when Bitcoin is up at $1 million to 1.6 million, 1.8 million, wherever it's going to be. But it's interesting to look at the both in comparison, looking at the Ethereum to Bitcoin ratio and how that we're moving into a period where global liquidity begins to increase, and so the Ethereum to Bitcoin ratio should start going up. And so you look at the long-term trend lines on Ethereum and you're like, oh, okay, well, if this trend channel is going to hold, which it seems to be because it is respecting price fairly well, we could see this. Now, from a fundamental standpoint, does this make sense? Well, if you think about it, the Treasury Secretary said that there's going to be trillions, plural, of stablecoins or stablecoin demand via U.S. Treasuries. So basically, what he exactly said was that there's going to be trillions of demand for U.S. Treasuries, but that directly corresponds to the amount of stablecoins you would have. So from that statement, you can infer that, okay, well, it's not that far-fetched to say that Ethereum will have a multi-trillion-dollar market cap moving forward, because you can't have trillions upon trillions of dollars worth of value on Ethereum and the market cap of Ethereum not be substantially higher. We can take a look at so we're looking at ultrasound.money.com, and you can see that, okay, so here's the market cap for Ethereum. It's 236 billion, and then it's our ERC20 tokens value. It's got 260 billion. About 131 billion of that is stable coins. So you'll notice that the amount of value that is secured by the Ethereum network, real world assets and whatnot, it's very closely tied to its market cap. So if you have like $1 trillion worth of stable coins on Ethereum, then in theory, its market cap should be very close to $1 trillion. And so, you can just come over and look at the M2 money supply. So you have $21 trillion that could be converted into stable coins potentially. So the stablecoin demand is definitely there for this to become a massive, massive market cap asset. So in order for it to hit like an $80,000 market cap, that would be, What would that be? That would be 10 trillion. So it's only a $10 trillion market cap. I know only 10 trillion, but even so, I mean, you're talking, it's more than stable coins, because they're talking about tokenizing stocks. Our stock market's $50 trillion. The US bond market's like another 40 trillion. I think stocks and bonds combined, I think it's like $112 trillion worth of value that BlackRock and the others are talking about tokenizing it onto Ethereum. So, I mean, the demand for assets to be tokenized onto Ethereum and secured by it, it's certainly there. It's just a question of how fast are they going to tokenize these assets and get everything on chain. Ultimately, I think it's going to happen a lot quicker than people realize, because they want to maintain dollar dominance across the globe. And the only way that you can do that is if you do it very, very quickly. Because if you kind of, kick rocks and kind of just take your time, another world power, another world country is going to figure this out, that your currency can become the dominant currency if you start pushing it out into the crypto space. So the United States is going to want to do this very, very quickly. So it's just a matter of time, in my opinion. It's coming. It's just a matter of time. So that pretty much wraps up the video. Let me know what you think in the comments down below, and I will talk to you all in the next one.